Hi there, welcome to Kneppy Invest and welcome to 29th of April 2025, about 1 hour and 36 minutes left of trading today. And it's been a surprisingly really good day on the ASX. In fact, a few of the indices up by more than 1.5%. Small caps, tech and resources. Not sure what's happening because the rest of the world's markets aren't performing like this. In fact, I had a look at the Asian markets because I thought maybe it would be up a little bit. And then I saw up by this amount and I thought, oh, the Asian markets must be doing really well today. Nah, Hang Seng is up barely and Nikkei up a little bit as well, but nothing like we are seeing on the Aussie markets today. And even the American futures aren't up all that much. In fact, they're negative, or NASDAQ, right there. Where is it? No, NASDAQ is up 0.23. Dow Jones up 0.24. And even the New Zealand market's down. New Zealand market is down 0.3%. So I'm not sure what's causing this bullish behavior in Australia today. It could be a mistake. It could be a little bit too much optimism. And I'll show you a few tweets that is making me lean a certain way. Now, typically I'm more bullish than bearish. I think that's a fairly logical thing to be. But at times, I do think it pays to be a little bit more bearish than bullish. In fact, I'm at that point right now. Now, just because I'm a little bit more bearish than usual doesn't mean we're going to see a recession or a massive bear market. It just means that the risk is increased. The risk is increased. Now, that risk could be 30%, 40%, 50%, but usually I think it's like less than 1%, or maybe, we'll say maybe less than 5%. Anyway, so the agenda of today's video, we'll go through the ASX today, looking at the best and worst performing sectors, indices, and also some companies. And then we'll have a look at the top 5 stocks of the day. Oh, what a decision I had to make when it came to the top 5 stocks of the day. A few companies I thought were no-brainers, a few absolutely brilliant Appendix 4Cs and really good reactions from the market, which is probably more important than what I think of the Appendix 4C. And if we do go through the honorable mentions, I'll be talking about 9 companies who could have made it into the top 5 and didn't. And there's quite a few other companies that were on the precipice of being in the honorable mentions as well. This time of year, late April, late January, late October, what's the other one I'm missing? Late July is probably the busiest when it comes to the ASX because quarterly reporting season, and also particularly in April, maybe even October, we do see a fair bit of trading updates as well. And we are seeing a lot of trading updates being released as management of companies realize the company they are managing is performing better or worse than expected. And then we'll have a look at one of your comments. And I think one of the comments, I'll probably just look at Fortescue, because that's a company that didn't even make it into my honorable mentions, but they did release their quarterly today. Okay, now before we have a look at the ASX today, let's have a look at trading economics. Asian stocks rise, talking about deals with India, but no sense of any deals with China at this point in time. In fact, Scott Bessent, the Treasury Secretary, says it's up to China to de-escalate tensions, and I don't think China would want to de-escalate tensions. I think they're in the box seat at this point in time and some sort of deal with India, but it's this potential trade war. I think we're already in a trade war between China and the USA, could further destabilize world's economies. And that's why I am not rushing in to a 0% cash. Definitely not at that point, even though our stock market is rising. Could have a look at the Capital Brief. I did go through this fairly quickly just to see what I might have missed. Interesting, mineral resource shares rocket despite guidance downgrade. I actually did see that. I didn't have a look at their quarterly, and if the share price is up a fair bit with a guidance downgrade, that is interesting in itself. Boss Energy, I didn't have a look at Whitehaven. Looks like they are on track for financial year guidance. Shares lift 4%. I did have a look at Boss Energy. Yes, I remember now, because first free cash flow quarter. Anyway, and apparently Auckland International Airport delays second runway by a decade. That's a big delay. And there we go. Fortescue surely quarterly shipments, lifts, keeps financial year guidance. Okay, now on to these tweets. 3 interesting tweets. We'll have a look at the Dalio's tweet last. David Rosenberg, I do like this economist. He's a Canadian economist. Started about relationship between Canada and the United States, in particularly focused on the Canadian people who are turning away from the United States en masse. Quite a few videos on this. They're cancelling all their holidays, and a lot of Canadians actually do go into the United States for the holidays. They're cancelling all that, then even boycotting USA goods. And he mentions here, David Rosenberg, rare for Canada to ever make to the front page of the Wall Street Journal, but that is exactly what happened today with Canadian stiff arm US brands. In my various chat lines with US friends and contacts, this only elicits guffaws, and derisions of laughter. That is until I show them that the data are revealing that Canadians buy $500 billion of American goods and services annually. As that evaporates, the cost to the US economy comes to a non-trivial 2% of GDP. As everyone focuses on China, it is tiny but angry Canada that could well emerge as a trading partner that tips the US economy into recession that nobody I know voted for back on November 5. And I think this is going to be happening with a lot of countries out there. I know people who live outside the United States who have cancelled their trips to the United States in the next year. I'm not doing that, but I do know a lot of people, maybe not a lot, but I do know people who are doing that. And one of the reasons they're doing it is they're actually a little bit afraid about what might happen when they enter into the United States. And there's been cases of this, and who knows why. I've heard that one of the reasons why people get questioned is because of lack of hotel booking or something like that, and they're being deported or something. Anyway, so people are scared of that happening to them. If you go on a holiday, you don't want to be contained in a room with a few people who might be mean, that sort of thing. Anyway, so that's David Rosenberg. And what was the other one? Oh, I like this one. I like this. Another Donald Trump saying Canada should be the 51st state. I really like his reasoning. He doesn't say it here, that America is subsidizing Canada with hundreds of billions of dollars a year. That's because they have a trade deficit. So Donald Trump believes that if a country, if USA has a trade deficit with another country, that means they're subsidizing. Now, by that logic, that means Australia is subsidizing USA, and USA should become our 7th state. 7th state. So USA, become our 7th state because we are subsidizing you. Anyway, so I don't take Donald Trump seriously because we already know that he believes that the foreign country pays a tariff, which is absolutely bogus, and he just doesn't understand trade deficits and surpluses. Doesn't understand it, and for that simple reason, I just can't take him seriously. But the bad thing is, he did say he loves the uneducated, and the reason he loves the uneducated is because they don't know this sort of stuff, and they just listen to him and believe him, and that's why he loves the uneducated. Sort of like Pol Pot in Cambodia. They loved the uneducated, and they killed everyone else back in Cambodia in the 70s. That won't happen in the United States, but that's probably what Donald Trump wants. He wants all the educated people to die and be exported. Deported, not exported, deported. And Ray Dalio, it's too late. The changes are coming. No, I know I do read a lot of Ray Dalio stuff. I do like what he says, but he's hearing from a large and growing number of people who are having to deal with these issues that is already too late. For example, many exporters to the United States and importers from other countries that trade with the United States are saying they have to greatly reduce their dealings with the United States, recognizing that whatever happens with tariffs, these problems won't go away, and that radically reduced interdependencies with the US is a reality that has to be planned for. So a good read of this, and I won't go into all of it. So he's fairly bearish. What I did find interesting in the comments is people just asking Grok. And what's the other one? There's Grok and Ask Perplexity. I did not know this could be done. For instance, Soren Vale says, Grok, break down this article into system shifts, immediate impacts, and long-term risks. Summarize why this is relevant. And then Grok gives an answer. Not that one. The second one here. System shifts, deglobalization reduces US-China trade with high tariffs and self-reliance focus. Global economic power shifts as US debt sustainability weakens. Immediate impacts. Companies like Jaguar, Land Rover, and Audi pause US exports, raising prices. US-China trade deficits hits $53 billion in early 2025. Long-term risk, economic fragmentation, which is not good for anyone, may weaken currencies and heighten geopolitical tensions. China's resilience and trade shifts to Mexico could mitigate some effects. Relevance, impact prices, jobs, and global stability, urging smarter planning for businesses and government. So what I found most interesting about this particular article was you can ask Grok and Perplexity to summarize an article like this. Aren't we living in a great world? There was another thing I saw, I'm not sure if it was a tweet. It was comparing all the AI stuff to an expert, like a PhD expert, and it's gone past that now. So it's gone past that, and it's gone past that within the last few months. So it's better to ask ChatGPT about something in particular, like something that's a PhD level question, than actually going to a PhD person and asking them. Isn't that fascinating? And it's just amazing the curve you see when it comes to the what's the word when it comes to the awesomeness. I don't think that's the word I want to use, but the awesomeness and the growth in those sort of things. What do you call them? ChatGPT and stuff? AI platforms? I don't know. Okay, let's have a look at the ASX today. And where is it? There it is. Market index. A good day. Shocking. I don't think we're completely overbought yet, but it's getting to that point where I'm getting a bit nervous that it's running a little bit too hot, our market, and that always makes me a little bit nervous, particularly in these sort of times. Now, if you go back, so this is the XGO, so that's the 1 minute. Funny enough, so our market has gone up all through the day, and if you have a look at the American futures, where is it? There it is. It's gone down. So I think we were rallying because the American futures are rallying, but the American futures have stopped rallying, but our market just keeps on rallying. So I think there's a little bit too much enthusiasm, sort of like when you see the share price of a company going exponential, you know there's going to be a sell-off. So I wouldn't be surprised if that's going to happen on our market over the next few days. But again, it's going to be dependent on what happens in the United States, in my opinion. But don't forget, if you go back to the XGO, this sort of thing happens at the start of all bear markets. Well, maybe not all of them, but a lot of bear markets, you do see a rally at the start of the bear market. Now, COVID-19, we didn't really see that. But even in 2022, there was a rally. So we started to see the XGO and all the indices drop away, and there was a rally. You can see that back in early 2022. So initially, there was a big drop initially, and that would have been in January of that year, and it rallied. The XGO rallied all the way back up, almost perfectly to the previous top, and then we saw the big drop. And if you go back to the GFC, we saw this as well. We saw some pretty big rallies. In fact, the market started to turn in late 2007, and we saw a nice little rally, and we saw quite a few really good rallies during that bear market. In fact, in May of 2008, it looked like maybe it was moving into an uptrend. And then if you go back to, I don't think we're really going to see it, but if you go back to say, oh, look at that. Even with the tech bubble burst, we saw a massive rally, huge rally, like a V-shaped recovery, and then the massive drop. And I think you can see that if you go to NASDAQ as well. So don't be absolutely fooled by this sort of recovery, this sort of bounce. It doesn't mean the end has been or is in. And the reason I say that is I still think there's a lot of uncertainty in the world. And if Ray Dalio is right, and it's just too late now, I think there's going to be serious disruptions. And obviously, the best way to solve all this in America is for them to consume less, and that's going to be significantly damaging to their economy. But that is the ultimate solution, to ask the American people just to consume less. And in a way, Trump could be doing that by hiking tariffs. Prices will go up, and they will consume less. But that will lead to a recession. In fact, it could lead to a really deep recession. Okay, let's go back to the ASX today. And yeah, so our indices have rallied all through the day, which is interesting in itself. If we have a look at the different sectors, energy has had a pretty good day. Woodside released something today. I think Woodside below $20 does look interesting. Utilities, IT, materials, real estate, all up by over 1%. In fact, the only sector down is staples, which makes sense. Defensive, people becoming a little bit more risk on, it seems like. So maybe there's a bit of rotation from staples into some of the more risky assets like IT or tech or other ones out there, and or banks. Banks are risky right now. Banks are really risky because if we do go into recession, share price of CBA will drop 60%. I'm going to call it right now, maybe even more than that, 60%. Small caps, that's probably another really good indication that there's more of a rotation from defensive into the more risky assets because small caps have had a really good day. And those are traditionally perceived as being more risky. I would say they're more volatile, maybe not more risky, but just more volatile. And yeah, ASX 20 only up 0.76%. And I'd say that's because the banks, I'm trying to think if there's any gold companies in the ASX 20, I can't think of any. And I'd say 19 up, 1 down. Which company is down? We already know it's Coles. Yeah, that sort of makes sense. Coles and Woolworths worst performing in the ASX 20. And a really good day for Fortescue, up 5.49%. It's really interesting. Fortescue did not change the guidance. Whitehaven did not change the guidance. Everything's going to plan. The share prices have rallied. So I think the market is may have been expecting for a downgrade for both companies. So that's actually interesting. So I have no interest in Fortescue, Rio Tinto, BHP, simply because iron ore prices are doing nothing. And so why buy any of these companies? If the price of the commodity is not doing anything, there's no reason to get bullish about those companies because, overall, the price of Fortescue, Rio Tinto, BHP is highly affected, highly influenced by the price of iron ore. If iron ore goes down 40% from here, Fortescue's share price might go down 60%. Would iron ore go down 40%? Who knows? It did it in 2016 or 2015, 16, so it could do it. Okay, let's have a look at the top gainers and top losers. And we're going to start off with the top gainers. And a company called DY6 Metals up 292.86%. You might be asking me, why is this company not in the top 5 stocks of the day? And the reason is, I'm going to talk about it right now. Interesting story, DY6. You'll notice the share price is not changing at all right now. And that's because they're in a trading up. So the company actually did release something this. Oh, by the way, and actually I'll talk about this in a second if I don't forget. I more than likely will forget. I will talk about it later. DY6 up 292.86%. You notice they've got an indicated price here, and that's the reason behind that is they're in a trading halt. So they released an announcement at 8:09 a.m. High-grade gallium potential discovered at Tundaloo. Fine. There's no way I could read this. I don't know anything about gallium. Nothing about gallium. I could actually GPT it. Can I do it? What is gallium used? Let's have a look what ChatGPT says. Really interesting metal. It's soft enough to melt in your hand. Wow, but extremely important in modern technology. Semiconductors, well, there you go. LEDs and displays, solar panels, medical equipment, thermometers and barometers. That's very interesting. And mirrors. Gallium doesn't exist freely in nature. It's usually extracted from aluminum and zinc ores, and because it melts at just 29.8 degrees Celsius, you can literally melt a lump of gallium in a cup of warm water. No, I don't care about lithium versus gallium. This is an independent question. Okay, so that's gallium. And I can't read if these are good hit. I suppose this must be with the market reaction. I'm going to assume this is really good. So 74 meters at 93.26 grams per ton. Let's hope it's not hot there because then it's just going to melt. And yeah, so I would assume this is considered really good hit, a really good grade, that sort of thing. and that's why the share price rallied. However, after trading for about 45 minutes or so, the company went into trading halt. And why did they go into trading halt? It was, what do you call it? It was a clarification. So pending clarification to the announcement released by the company earlier today. I'm not sure what the clarification is going to entail, so that's interesting in itself. A lot of times the clarification is not good, and that's probably why the indicator price is down 27.27%. So that's DY6, and let's have a look at the chart for DY6 metals. And look at that chart. Look what happened on the 27th of May 2024. Share price rose 334.21% and then fell all the way back down to where it started. And this is the problems with these sort of companies. You just don't know which announcement is going to shift the sentiment in the company. So we have a like day. 27th of May is fairly similar than what we're seeing today. And on that occasion, the share price pulled all the way back to where it started. So this is one of the reasons why I would never trade one of these sort of announcements. And by the way, the market cap of the company is like $8 million or something like that. $8 million. Okay, so let's go back to the top gainers. Medical Development International, stock of the day, up 46.24%, released for Appendix 4C. I bought on the most recent Appendix 4C, so in January. I thought that was pretty good. And then they released this one. Share price had pulled back significantly, just like DY6, but no reason behind it. I'm not sure what the market was thinking. And then they released the next Appendix 4C, and we've seen a very good reaction. Understandably, another really good Appendix 4C or quarterly from Medical Developments. What else? Harmoney. Not sure if it's Harmoney or Harmoney, but Harmoney released an upgrade. Share price up 24.75% on fairly low turnover. You can see a lot of these other companies up a fair bit on a very low turnover. We're talking about between $100 and $125 of trading. And what else? Marino Co. No, low turnover. Uranium. I noticed uranium companies did fairly well today. So uranium must be up a fair bit. I'm going to see if Elevate released anything. No. So I think just uranium's had a good day. Now, I'll talk about this in a second. Clever Culture Systems released an Appendix 4C yesterday. No reaction from the market that I can remember. I did put it down on my list of companies to have a look. I'm pretty sure there was no reaction. I thought it was good. They were operating cash flow positive for the first time, and the share price was flat. So I'm going to have a closer look at Clever Culture. It used to be called LBT. I owned LBT about 8-9 years ago, and then I sold it when the share price ran up tenfold on FDA approval, and it's taken the company 8-9 years to become operating cash flow positive. Yes, 8 or 9 years. So just because a company can get FDA approval doesn't mean the company is going to bring in a lot of cash. And Clever Culture Systems is a really good example of that. In fact, let's have a look at the chart since I'm talking about it. CC5 used to be LBT, and if we go have a look at the weekly chart, you'll see that massive run up in the share price. There it is, back in 2016. I think it was October. Yeah, October. I was a holder of this company until then, and then I got out, and I thought, I was thinking at the time, should I sell? I sold on the way up, so I was sold in 3 different times. And I completely sold out when the share price got to $1. Don't know why the share price says it only got to 75 cents. It got to $1. They must have done something. I don't know. Anyway, I can see how much the share price has dropped since then. And finally, the company is operating cash flow positive. And maybe a weak little breakout trying to happen. And that's about it for top gainers by percentage change, top gainers by market cap. MinRes. So I'll talk about MinRes now. So I did not have a look at this one. I actually am a shareholder of this one, by the way. A long-time shareholder of MinRes, mainly because of their mining services. I thought this was a really good mining services company, and they're more into mining now. And I think they're definitely lower quality than they were before. I won't challenge management, but I don't like the company as much as I used to. Activity report today. So no cash flow. This company doesn't have to release a cash flow. I'm pretty sure they do have to release an activity report, but they don't have to release any cash flow. They can release how much money they made or something like that, how much cash they have on hand. So what was interesting about this one is I didn't have a look at it, but according to Capital Brief, this was a downgrade. In fact, I'm going to have a look at the Capital Brief because hopefully they do mention it's a downgrade. Where is it? The company now expects full output at Onslow Iron Project to be between 8.5 and 8.7 million tonnes, down from 8.8 to 9.3. Costs are expected to be upper end of existing guidance range of 60 to 70 million per tonne. So that's not positive, that's negative. So why is the market bullish on this one today? I don't know. Have no idea. It's sort of like Flight Centre yesterday. They released a downgrade and the share price actually went up. And I think the market was expecting a downgrade and there was potential the downgrade was not as bad as expected. And that's why the share price was up. The market was already pricing in downgrade. So maybe that's true with MinRes because the share price has fallen a lot. Now above $20 again, but share price has fallen a lot. Still in a downtrend. So even though the share price is up today a fair bit, it's still in a downtrend. You can see a really good rally back in September last year. Share price went from $30 up back to $56. And so you can see there's really good rallies when the share price is in a downtrend. So this could be one of those for MinRes. So I wouldn't call the bottom being reached just yet. And what else do we have? So talk about MinRes. I could talk about Boss Energy, I suppose. So Boss Energy share price up 12.14%. But you'll notice there's a lot of, maybe not a lot. Yeah, there's a lot of uranium companies here. So Paladin up a fair bit, the Yellow up a fair bit. So Boss Energy up 12.14% on the back of their quarterly report. Doesn't necessarily mean you can see a lot of other uranium companies, Lotus Resources, Bannerman Energy. I'm going to have a quick look at uranium. Up a little bit. I don't know why these uranium companies are going hard because if you have a look at the uranium chart, it's not that bullish, even though it has rallied the last 4 to 5 days. Again, this happens on occasion. So I wouldn't be getting excited about uranium companies right now. And the other thing is they're rallying way harder than what we're seeing with the underlying commodity. Maybe because of Boss Energy. I have no idea. Market can be weird at times. Boss Energy, this is what you want to see. So Boss Energy is in production and receipts 16.583 million, but company operating cash flow positive 3.94 million. But maybe more importantly, they're actually free cash flow positive by $1.4 million. Not a lot, and you want that to increase a fair bit because this company has a markup of it's over $1 billion. Yeah, 1.3 billion. So you need to see a much better cash flow from this company, but they are operating cash flow positive and free cash flow positive. And I think it's the first quarter of the company being operating cash flow and free cash flow positive. Let's have a look. Yeah, there we go. Honeymoon generates first free cash flow on highly successful ramp up and strong margins. But I would like to see that cash flow improving further because on this sort of cash flow, the company is valued quite highly, quite expensive. Okay, so that's Boss Energy. What else do we have here? Nothing much. Dubber. I'll talk about Dubber. Did that make it into my... Yes, Dubber did make it into my honourable mentions. So let's talk about Dubber here. Share price up 10.26%. On first glance, this looked pretty horrible. On first glance. And the main reason I say that is if you have a look at the cash burn, you'd go, well, yes, it's a very typical Dubber Appendix 4C. So let's have a look at it. If I can find it, there it is. So company is receipts 10.627 million and operating cash flow negative by 8.932 million. I thought, I'll just move on to the next company. But I did have a look at their commentary. And no, I didn't have a look at the commentary. It was not the commentary. So I had a look at the cash burning through a lot of cash. I had a look at how much cash I have on hand. So they went from 20.6 million to 11.5 million. I went, oh, they're burning through so much cash. They had to answer Section 8. Section 8, it can be really interesting. It's like the ASX asking the company, hey, you're burning through this amount of cash. You don't have much cash left, many quarters of cash left. What are your plans moving forward when it comes to cash? And what they've mentioned here was actually quite enlightening. So, one-off 6.8 million payment to ATO in January 2025 for final settlement of PG tax amount in arrears and associated interest has significantly increased operating cash flows for the March 25 quarter and will not reoccur in future quarters. Excluding this one-off payment, the estimated quarters of funding available is 7.5. So they have to answer this. A company has to answer this if they have less than 2 quarters of cash left based off their most recent quarterly cash burn, which is a rough way to do it, but I'm not sure if there's any other way to do it. And a lot of times you will see some really interesting comments made in these answers. So section 8.6. Most of the time, they don't have to answer it because most companies have more than 2 quarters of cash on hand. So sometimes they would say, we're planning to do a capital raising soon, and wouldn't be surprised to see the share price of a company drop if they make that sort of comment. Anyway, so not as bad as a quarter. So if you take away that, what was it, 6.5 million, they're not burning through as much cash. Yes, but still not operating cash flow and free cash flow positive. Okay, let's go back to the top gainers by, well, that's it. Now we can move on to the top losers. And what do we have here? Oh, Quickfee. Quickfee, yes, Quickfee did make it into my honorable mentions. Quickfee released an update. I don't know why the share price is down. Not sure why the share price is down, 18.7%. It seems like everything was moving in the right direction. I don't know this company well. They sort of like receivables for lawyers and stuff like that, and accountants. I have actually something like that anyway. Do they have an about section? Here it is, a fast-growing financial technology company. Our mission is to help professional service firms accelerate their accounts receivables and get paid faster. Anyway, that's so I didn't go through this with a fine-tooth comb. I went through it fairly quickly, but I just saw here that they had a record quarterly revenue, up 29%, and EBITDA positive without the I in the third quarter of financial year 25. So there must have been something in this that the market didn't like. So nice increase year-on-year movement. So I didn't see anything on first glance that would make me think this was highly negative. This is one of the reasons why I have a look at how the market reacts. So the market hasn't liked this one for Quickfee, and I still can't find it. And again, I don't know this company well. And let's have a look at the chart for QFE. By the way, I did not have a look at the chart for BOE. Boss Energy. This one is all over the place. There was a long-term downtrend. This was a very long downtrend for Quickfee from middle of 2020 all the way through to start of last year, looks like it. But it looks like share price is moving back towards those lows we saw at the start of 2024. So no interest in this one at this point in time just because of the chart. The chart actually didn't look that bad last year into maybe the start of this year, maybe not, but doesn't look that good right now. Pact Group, top 5, I'll talk about that. In 29 metals, share price down 12.9%. Oh, that is not in my honorable mention, so I can move on. They did release it quarterly. Market doesn't like it. Share price still dropping a fair bit. 29 metals. I'm just waiting for maybe the bottom to be reached for 29 metals. But the share price just keeps on dropping. And what else? Nothing. Now let's have a look at top losers by market cap. We have Northern Star in my top 5, so I don't have to talk about that one. And nothing else of note here. Kuenenberry did release something today, but it was just a strike or something. Okay. Now on to some other companies that I just want to mention fairly briefly. We'll start off with Vection Technologies. So this company went a training halt yesterday, had a bit of a say about management. So they released a really good quarterly. Operating cash flow positive by, was it $2 or $3 million? I thought, if they didn't go into training halt to do a capital raising, the share price probably would have gone up 20, 30, maybe even 40%. Yet they decided, well, let's do the capital raising now. And they wanted to do it looks like they wanted to do a $2 million capital raising, but they upsized it to 3.55 million. Placement, that's the other issue I have. This is a placement to institutions, so shareholders can't participate in this capital raising. And it was done at a discount, a pretty big discount. So 25% discount, done at 1.5 cents. No wonder institutions wanted to get more money out of Vection Technologies. So this is even more dilution. If this is even more dilutory, if that's the word, to shareholders. And this is on the back of a really good quarter. I just don't know what management are doing here. It's a ridiculous capital raising, timed badly. It was just, you should have done this after, in a few weeks. Again, it depends on the market, but worst case scenario, share price comes back down a little bit. But I think there was a chance the share price could have gone up, could have doubled on the back of this Appendix 4C. So I really think some management teams need lessons in how to manage this sort of thing. I do think there's skill to it. So I think this is absolutely ridiculous capital raising from Vection Technologies. And the other thing is, it's just a placement. Shareholders can't participate in it. By the way, this is their Appendix 4C yesterday. They even mentioned this in the capital raising announcement. What did they say? They said, upsized following strong Q3 results. Yeah, well, you've just destroyed the possible reaction from these really good Q3. Share price is down 10%. Yeah, ridiculous. Anyway, I apologise to all shareholders of Vection Technologies. Instead of the share price being as high as maybe 4 cents, it's now 1.8 cents, and the chart looks. This could have been the rebound that I think you've been waiting for, and I think the share price is heading back towards 1 cent, possibly. I just don't understand. Syrah Resources. I don't know why I wrote this one down. I must have written this one down for some reason. So why did I write this one down? I can't remember. Because there was nothing exciting in this. In fact, if I remember, I'll come back to Syrah Resources. There was nothing exciting in this at all. And what I mean by nothing exciting, if you go to their Appendix 5B, receipts really low. I think they're not in production anymore. They've had to suspend production or something. Operating cash flow negative. But I did write it down. For some reason. I circled it even. Usually I circle the tickers going, oh, this was an interesting one. And for the life of me, and typically I know why. So I'd usually open up. Oh, I know now. I know why I circled it now. It's nothing to do with the company itself. It's actually to do with Commsec. Okay, so what I do at the start of each morning is when trading begins, or not when trading begins, but around about whenever I get home anyway. So what I typically do is I just filter all the announcements. I just want to see all the price-sensitive announcements. So I came to Syrah Resources. They released a presentation at 9:18 a.m. And here it is. There it is, Syrah Resources, 9:18 a.m. And I went, where's their Appendix 5B? And then I put in the TIG code here, Syrah Resources, and then I saw they did release a cash flow report at 9:11 a.m. I thought, I must have missed it. And then I went back and it wasn't there. There was nothing there. It is here now. So maybe for some reason it's been updated. But this is the first time I've seen where a price-sensitive announcement has not been in the Commsec announcement page. And I'm wondering now whether on occasion some of these price-sensitive announcements are filtered out. So it's definitely filtered out. It was not there. So this is the first time I've seen that. So nothing to do with the company itself. And now I realized, because the announcement itself was, although the share price is up. And the chart might have found a bottom. I think Syrah Resources' share price might have found a bottom. It looks like it's trying to consolidate now. So this is an interesting one just because I think it's sort of rounding out. It's going sideways. So even though Syrah Resources' share price has dropped a lot, their financials are not that good at this point in time. Maybe the bottom has been reached for this company. Syrah Resources, Peet. Peet. There is a company called Peet on the ASX, P-E-E-T. I thought this might have something to do with bogs. I have no idea. Is a peat a bog? Peat versus bog. Let's have a look. Pretty sure they're in the same sort of. Oh, wait there. No, in those, a lot of times I do ask investing questions. So there you go. Look at that. No. I'll just say no. The thing. Maybe it's not Port Peat, bog versus peat. In soil terms, not the companies. Oh, I spelled it wrong. There you go. P-E-A-T. Yep, I have no idea. I'm not a gardener. I know something about bogs, but peat, no idea what peat is. So they're completely different. Looks like they're completely different. Okay, so I have learned something today. Anyway, Peet. Share price up a little bit, 2.82%, on an earnings increase. And I thought, wow, Peet is a developer, I'm pretty sure a real estate developer, and they increased their guidance. Targeting profit of 55 to 58 million. Previously, their profit was supposed to be between 50 and 55 million. So typically, if a company releases this sort of profit upgrade, the share price should rally a fair bit, but it hasn't. Hasn't at all. Only up 2.82%. If the share price had rallied a lot, it would have been in the top 5 stocks of the day. I can almost guarantee you that. And let's have a look at the chart. Chart doesn't look that bad. Weekly chart, nah, no interest in this one. This is not the characteristics of a high-quality company at all. Probably one of the reasons why I've never looked at it. Okay, 2 more companies to go through, honorable mentions. The first one is BSA. So, share price actually down. It was up. It was up at like almost over 10% at one point. So if you have a look in isolation at this particular Appendix 4C, the other thing I should mention is BSA has a market cap of $5 million, $5.72 million. So keep that in mind. This company has a market cap of $5.72 million. If you have a look at the Appendix 4C, without knowing anything about this company, you'd say this might be the cheapest company in the history of the world and might be the cheapest company in the history of the world for the next billion years, because they were operating cash flow positive by 9.362 million for the quarter and operating cash flow positive so far for the year, 17.33 million. They also have $11 million of cash on hand. Do they have any debt? They don't have any debt. They do have an unused financing facility, but no debt. So what's happening here? Market cap is $5 million. They have $11 million of cash on hand. Operating cash flow positive by $9 million. What's happening here? Well, they lost all their business. They lost all their business. So eventually, cash flow is going to go all the way down. They do mention it in the commentary up here. So this is very important to know what's happening, to understand why the valuation of this company is so low. Here we go. Key contract updates. BSA unsuccessful in new NBN co-field module contract, unwinding that particular current contract, so revenue and cash receipts will go down. They also been notified of changes to expected volumes for existing smart metering contracts with IntelliHub and Blue Current. Packages of work expected to reduce significantly with no material revenue expected in financial year 26. I'm not sure if this company is going to have much revenue in like a year's time. Anyway, so you can actually see that just by the chart. I was a little bit interested in this company because it seemed cheap, but there was a reason behind that, and that was potential loss of contract. So let's have a look at the daily chart. It looks like the share price was trying to turn upwards, and then they lost that NBN contract. Share price on that day fell 83.84%. And finally, Brainchip. Brainchip still has a market cap of 400 billion, I think. No, not billion, 400 million, 552 million. And this I always want to. I always have a look at this Appendix 4C for interest. I'm just waiting for some signs this company has reached the point where I can say, wow, this company is interesting. $136,000 of receipts. Cash burn of $4.1 million in a quarter. How much cash they have on hand? Where is it? Sorry, I went right past it. They do have like 17 millions of cash on hand and not much debt, but I'm just looking for a sign of Brainchip getting to the point where they're actually selling something, but they're not. And I've been at that point for like 5 years now, so it's taken a while. But just because I've been waiting for 5 years doesn't mean it's not going to happen. It could happen. By the way, the chart all over the place, a lot of volatility in this, and it's almost impossible to value this company. At one point, I did hold this company, but that was just a trading position. And I was thinking at the time, so when the share price was going bonkers, I was, particularly this little rise in share price in late 2021, share price went as high as like 250 or something like that, ridiculous. But I said there is a chance if they are successful with what they're doing, this will become a really big company. But that's a big if, a huge if. A lot of people out there believe this company can succeed. I'm not one of those people yet. They have to prove it to me. Okay, so that's all the honourable mentions. So quite a few there. The companies I did not talk about, Ramelius McMahon, BBC, which is some sort of banking company, Endeavour, got a new CEO. Dimerix and Orthocell both in trading holds. It looks like pretty good news for both companies. So Dimerix and Orthocell, and quite a few Appendix 4Cs and 5Bs I did not discuss, including Max 7, Fineos. What else is there? Change, Financial, Bellevue Gold, Hillgrove Gold, Hillgrove Resources also released their Appendix 5B. Now to the stocks of the day. Coming in at number 5, we have Pact Group. Pact Group, share price down 17.8% on voluntary they also released a business update, but I thought there's no point looking at that. Pact Group, voluntary delisting from ASX. And I went, well, share price is going to drop a lot. And I opened up this particular announcement because I was interested to see their reasoning. Because most of the times when a company decides to delist, the excuse they use is the market is not valuing the company right. It's undervaluing the company. And I always think, no, you're valued as you should be. And if you delist, the value of the company is going to drop significantly because that's the way it works. Publicly listed companies have a premium versus private companies. That's the way it works. And it's there's an obvious reason why that works like that, because your shares are easily traded on the exchange. If you're private, you can't do that. So anyway, but they did not use that reason at all. And I was a little bit shocked because I thought it would be the number one reason. So the reasons why they are delisting: very concentrated nature of their registrar, low level of trading of shares on ASX, cost maintaining listing relative to the benefits, and the burden associated with the compliance with the regulatory regime applying to listed companies. And nothing about valuation. They also go into, there was some sort of takeover bid, and Benneman, whoever bought a lot of shares or something, and it was a takeover bid from Benneman Industries, wanted the company to delist as soon as it was able to do so. I think there will be a vote on this, but I assume it's going to go through. And that's why the share price is down, because people don't want to own companies that are not listed because it's hard to get rid of your shares. That's why private companies trade on a discount. It's, in fact, a lot of times a company will list on the market, like an equity market, so shareholders can get rid of the shares, like employees can get rid of the shares. In fact, that is a reason some companies have listed, so we can offload some of our shares. It's much easier to do that. Anyway, that's the share price or the chart of Pact Group. No interest in this one at all, although I did own this for a long time when they first listed, because look at this chart. So they list, I think, was this a spin-off? Can't remember if this was a spin-off. Who spun off what? Amcor spun off. What's the other company? There's another one, Pact Group, and another one. But anyway, Really good chart from 2014 all the way through to 2017. This was a brilliant chart. Share price went all the way up to $7.20. Now the share price is it less than $1? 90 cents. Yes. Pact Group coming in at number 5. The company's delisting, but they're not using an excuse that most of them do use. Harmoney. Share price up 19.05%. I had a look at the presentation first because I released that 12 minutes before the trading update. Usually it's the other way around. Usually a company will release their trading update first and then the presentation. It just makes sense. Now, I'm not totally blaming Harmoney or Harmoney. It could have been the ASX who did this. I don't know. I don't know how it works. I don't know how long it takes for the ASX actually to release an announcement. But this was an upgrade. This was an upgrade. Cash and Pact guidance upgrade to 5.5 million. Now, you might say, well, not much of an upgrade because previously it was only 5 million. Now it's 5.5 million. You might be laughing and say, wow, it's not much of an upgrade. It's a 10% upgrade. But it also means the company's performing better than what management expected. And it's a good sign. It's a good sign. Also, last year they had a profit of 0.7 million, 5.5 million now expected for this year, and they're targeting above 10 million for financial year 26. So looking pretty good. Cash return on equity, 2% last year, 20% wanted this year, 25% plus next year. I do like that. I can definitely understand why the share price is up a fair bit today because this was an impressive release from the company. In fact, maybe it should be higher on the list. So let's have a look at the chart for Harmoney. This is sort of the announcement that I could buy into. Share price has dropped a lot. A lot of companies in this space, like these small lenders and stuff like that, have seen their share price completely destroyed by what happened with higher interest rates or rising interest rates. But I think a lot of these companies have found a floor. I did hold Money Me for a while, and the share price of Harmoney has just been all over the place, but still going sideways. And we have seen the share price pop up. Don't know why. So it looks like the share price rose when they released their results in February. Share price up 26.4%, and then fell all the way back down. The market is doing weird things right now, selling off when they probably should be selling off. So interesting chart for Harmoney or Harmoney. I don't know how to pronounce this one. Okay, so let's move on to a company coming in number 3. We have Northern Star Resources. Share price down 4.98%. One of the reasons why gold might be down, or gold sector down, is because, gold prices are down. Okay. Although if you look at the gold chart, it's just going sideways. There's nothing too untoward, nothing bad with the gold chart. Back onto Northern Star Resources. They released their quarterly activities report today. Among many who did release their quarterly activities report, this was a downgrade. I was a little bit surprised to see Northern Star release a downgrade. So, yeah, that's why the share price is down. A downgrade. Here it is. Financial year 25 outlook revised. Production and cost guidance is either lower for production and higher for costs, which is not what you want to see. So production revised down from 1,650 from a range between 1,650 and 1,800 to a range between 1,630 and 1,660. So it is a drop. It is a drop in production, and costs have increased from between 1,850 and 2,100 to between 2,100 and 2,200. So this was a simple downgrade from Northern Star. They did give some reasons: delayed access to Golden Pike North, higher maintenance costs, and higher royalties from elevated gold prices, which is interesting because that means, in a way, this company's hurt by increasing gold prices because they're using it as an excuse why they needed to downgrade. So that is interesting in and itself. So let's have a look at the chart for Northern Star. I don't want to say there was loose lips here, but the share price has pulled back a fair bit the last few days. Last 3 trading days, share price has dropped from 23 down to 21 and now down to below 20. This could be a buy the dip situation for Northern Star. Share price is still an uptrend, and I still think they will overall benefit from rising gold prices. So if you do like gold, maybe nice little buy the dip situation for Northern Star. So that's coming in number 3. Coming in number 2, we have Aroa Biosurgery. Let's see how much the share price is up. Only 7%. Interesting. So the company released their Appendix 4C. I'm interested in this one, but the chart looks pretty bad. Let's go straight to the Appendix 4C. So $20 million in receipts, that's New Zealand dollars. So in Australian dollar terms, that's probably 5 cents. 5 cents, 4 cents maybe. I joke. There's not much difference between New Zealand dollars and Australian dollars. In fact, let's chat GPT that. 200127. 2127 New Zealand dollars in Oz dollars. Let's see if it understands that. Oops, I said S. Yep, thank you. I did mean New Zealand dollars. So 20 is 18.315 Australian dollars. I'm not sure how up to date this is. It could be a little bit backwards. Not late. It could be a little bit delayed. That's the word I was looking for. Delayed. Anyway, so cash receipts above $20 million for the very first time. And the company is operating cash flow positive by over $1 million. And I was thinking, ooh, that's nice. But it is also the second quarter in a row of positive cash flows. So there is a chance this company has hit that inflection point. They have maintained guidance as well. So we have seen other companies' share price run up because they maintain guidance. So maybe that's what's happening with Aroa Biosurgery as well. Now, the share price, actually, before we have a look at the share price, let's just have a look at this chart. Aroa Biosurgery's cash receipts history going back to 2020. It's on the increase. It's a nice trend. Now, you could say the last few years, the trend has really slowed down. And I actually would pay that. It does look like the trend in receipts has slowed down. Now, the market cap of this company is much lower than it used to be. I believe it would be like 140 million. 151.76 million. So much lower than it used to be. And the reason behind that is because the share price has dropped a fair bit. Share price has been, in fact, the share price dropped on the 29th of January, the last time they released Appendix 4C. Share price dropped on that day 24.38%. That was a trend killer at the time because the share price was in an uptrend before that. And the share price has recently just bounced off its all-time low at 55 cents. And when I say all-time low, that's the chart. That's the weekly chart from when they listed and a well-defined downtrend. What you could do here is you could just say that's a downtrend line. Oh, it's almost perfect. If you go from the very top when listed to the next high, to that high, it's a perfect downtrend, almost perfect downtrend line. So what you could do is just wait for that downtrend line to be broken. And at this point in time, that price of the downtrend line is 75 cents, so well above where it is now. And I think that was a pretty good quarter from Aroa Biosurgery. They've hit the inflection point. Maybe if they maintain being operating cash flow positive and profitable, they could start to find some scale. But I would like to see the cash receipts and the revenue start to grow a little bit more quickly than it is doing now. Now onto the stock of the day. A company I do own, so maybe I'm a little bit biased, but Medical Developments International. Share price up 33%. Was up even more than that. Share price high today, 73.5 cents. So we are talking about share price up probably 50%. Yes, in fact, more than 50%. So we have seen a little bit of selling coming today, which is understandable, and you'll see why when we have a look at the chart. Okay, so the company has released their Appendix 4C for the quarter. What I'm going to do is go back and have a look at their January quarter or December quarter Appendix 4C, because the share price on that particular day rallied 31st of January. It rallied 51% and closed at 66.5 cents. So fairly close to where the share price is right now. So we can compare these two quarters and get rid of our Aroa Biosurgery. And which quarter is this one? Come on. So this is Medical Development's December quarter. So receipts just got above $10 million. and the company was operating cash flow positive by 1.921 million. So yeah, a really good quarter for medical developments. Nice increase in cash receipts, operating cash flow positive, free cash flow positive, and the market loved it. Share price up 51%, and I decided to take a position in the company. And then we saw, we'll have a look at the chart in a second. So let's have a look at this particular quarter. This is what I used to do. I didn't used to compare quarter on quarter. I used to compare quarter or year on year. So I used to go back to last year's quarter and compare them. But anyway, cash receipts up to 10.619 million, and operating cash flow positive still by 1.69 million, and still free cash flow positive as well. So the receipts have increased, but the operating cash flow has decreased a little bit, and probably the main reason behind that would be, looks like it's product manufacturing operating costs. Yes, and a slight increase in administration costs as well. But the main thing here is the company has seen their receipts continue to increase. And in fact, let's have a look at the receipts history. Here it is. We only have 5 quarters of receipts for medical developments because they weren't required by the ASX to release Appendix 4C up until last year. So their March quarter last year was their first quarter. 5 quarters of history is usually too small a sample for me to get too interested in this sort of chart. But there is an obvious trend here. Receipts are going up through time. That's exactly what I want to see. They've hit an inflection point, looks like. Operating cash flow positive and free cash flow positive on a continuing basis. And now let's have a look at the chart. So they're getting a lot of ticking of boxes here for this company. Now, this has been a wild ride, and it's a shareholder I have just held on. Share price rallied significantly on the last Appendix 4C. Share price went all the way up to almost, not quite $1, about 95 cents. A beautiful chart. And the share price then went from 95 cents all the way back down to 42 cents. In fact, the share price went all the way back down to where it started, which is weird. That's weird. It just shows you the market can be really weird. And I should have seen that and went, oh, now's the time to add to my position. But I was thinking, oh, maybe the market sees something that I don't. Now, we have seen another good reaction from the market. It's very similar Appendix 4C than the last time, very similar. But you see a completely different reaction in terms of we have seen way more selling today than what we saw last quarter. And the reason behind that, and you can just see by the one-day candlesticks, a solid green candlestick in January and a lot of selling with a high shadow. Why is it selling today? All these shareholders who bought at high prices and now see their opportunity to get out of this dog stock. So don't forget, shareholders, the majority of shareholders, when they buy into a company, they expect share price to keep on going up. If it doesn't, if it drops like this, they believe it's a dog stock. It's not their fault. It must be the company. The company's crap. Company's crap. I've got to get out of this crap company. So I have to sell. As soon as share price rises again, I will sell. And that is why we have seen selling pressure on medical developments today. It's simple as that. Just resistance. If you go back to last quarter, you can see the share price during the day was at almost a 1-year high. Today, we're talking about a 3-month high. No, 2-month high. Or 1-month high, in fact. So you can see the power of investor psychology. That's the only reason we're seeing selling today. It wasn't that it's a less strong announcement, just as strong, but resistance. Lots of resistance because of investor psychology. Very important to understand that. Okay, so that's medical developments. A really good, one of the best Appendix 4Cs we've seen this particular quarter. And I think if they release another quarter like this for the current quarter, I think that's it for this company. And it's not that expensive. MVP, it's $70 million, $65.91 million. So not that high for a company that is now hit that inflection point. Okay, one comment to get through. This is one of my longest ASX Daily Rundown videos. Fortescue seems to have had another fair quarter. We'll see if the market agrees. Prize, multiple in play, value discovery in motion, 22 minutes to open. Yay from Scott. So, yeah. So there was an announcement or the couple of brief articles saying, yeah, Fortescue, quarterly shipments lifts, keeps financial year guidance. So I did have a very quick look at Fortescue and what the reason I moved on to the next company, so share price up 5.82%. The reason I moved on to the next announcement was because in it, they were fairly, it was fairly obvious, if I can see it. Why can't I find it really quickly? No, I can find it now. So right at the bottom of the summary, guidance for financial year 25 shipments, C1 costs, and capital expenditure remains unchanged. So obviously the share price should not move much because there's no change in guidance. So I think what's happening here, and this also happened with Whitehaven, the market expected probably a downgrade, maybe a slight downgrade or something. Market didn't get the downgrade. Oh, things are not as bad as we thought, and that's why the share price is up. But again, because of iron ore prices, I have no interest in Fortescue, Rio Tinto, or BHP. And in fact, Fortescue share price is still in a downtrend. A really nice bounce of $14, which is the support level for this company, going back to the lows we saw back in 2021. There you go. $14 is an important level for Fortescue. $16.35 right now. Okay, that's all I have for this video because it's gone on for a long time. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.